Well, it's all over for Apple. The DOJ has spoken. Apple is a monopoly and has been preying on unsuspecting iPhone users for years now. The Department of Justice has sued Apple, and now that's the end of Apple's growth story. Those with green text message bubbles will no longer be social outcasts, and we can thank our benevolent government for ending this social outrage. Welcome to the Quality Investor. Today, Apple fell over 4% on the news that the DOJ has filed an antitrust lawsuit against the tech behemoth. And on this video, we're going to discuss what that means for Apple as an investment. We'll break down exactly what Apple is being sued for, and we'll cover, or really speculate, on what the outcomes of this case might be, as well as how long all of this will take. But first, we're going to look at exactly what this lawsuit entails. Before we dive in though, remember to like this video, and if you enjoy content like this, please make sure to subscribe to the channel. The Department of Justice are not the only plaintiffs in this case. 15 other states, along with the District of Columbia, have also joined in on this action. All right, so let's read some excerpts from the actual lawsuit that was filed in the United States District Court for the District of New Jersey. So in any antitrust lawsuit, the government must prove that the consumer has been harmed in some way and that the market is anti-competitive in some way. Yet it says here, Apple has opened its smartphone platform to third-party developers whose countless inventions and innovations have created enormous value. There is no extensive regulatory framework requiring it to do so. So basically, Apple on its own let third-party people come in and develop apps on their platform. But then in the very next paragraph, it states, in contrast, limiting the features and functionality created by third-party developers and therefore available to iPhone users makes the iPhone worse and deprives Apple of the economic value it would gain as the platform operator. It makes no economic sense for Apple to sacrifice the profits it would earn from new features and functionality unless it has some other compensating reason to do so, such as protecting its monopoly profits. So I'm a bit confused here. Apple is to sacrifice the profits it would earn from new features and functionality in order to protect its monopoly profits. Okay. The government is alleging that Apple harms competition by imposing contractual restrictions, fees, and taxes on app creation and distribution. First, Apple exercises its control over app distribution and app creation to dictate how developers innovate for the iPhone, enforcing rules and contractual restrictions. Second, Apple drives iPhone users away from products and services that compete with or threaten Apple. In doing so, Apple increases the cost and friction of switching from the iPhone to another smartphone and generates extraordinary profits. I mean, I'm certainly not an expert in these things, but this pretty much seems like every platform in the tech world today. And third, Apple uses these restrictions to extract monopoly rents from third parties in a variety of ways, including app fees and revenue share requirements. Apple collected a tax in the form of a 30% commission on the price of any app downloaded from the App Store, a 30% tax on in-app purchases and fees. While Apple has reduced the tax it collects from a subset of developers, Apple still extracts 30% from many app makers. Then down here it says, Apple is able to command these rents from companies of all sizes, including some of the largest and most sophisticated companies in the world. I mean, that sounds like an investment thesis right there. Apple has pricing power. And to me, this next part, the government continues to make a pretty solid investment case for Apple. Despite major technological changes over the years, Apple's power to control app creation and distribution and extract fees from developers has remained largely the same, unconstrained by competitive pressures or market forces. This seems a little contradictory to me, that Apple is supposedly operating in this anti-competitive marketplace, yet is unconstrained by competitive pressures. Honestly though, I would love to hear what phones everyone out there prefers and why you prefer those phones. Another reason they're being sued, super apps. Apple prevented apps from threatening its smartphone monopoly by undermining many programs that reduce user dependence on the iPhone. So the government's saying here that super apps can provide significant benefits to users. For example, a super app that incorporates a multitude of mini programs might allow users to easily discover and access a wide variety of content and services without setting up and logging into multiple apps. They go on to say that super apps also reduce user dependence on the iPhone, including the iOS operating system and Apple's App Store. So basically, by Apple restricting these super apps from the App Store, that increases the dependence a user might have on the iPhone. They also say that cloud streaming apps, Apple prevented developers from offering cloud gaming apps that reduce dependence on the iPhone's expensive hardware. So for years, Apple blocked cloud gaming apps that would have given users access to desirable apps and content without needing to pay for expensive Apple hardware, because this would threaten its monopoly power. My first question is the past tense here. Apple blocked. Does that mean Apple allows it now? I'm not a cloud gaming person, so I'm not 100% sure. And here is a pretty big one in my opinion. Messaging. Apple protects its smartphone monopoly by degrading and undermining cross-platform messaging apps and rival smartphones. Apple undermines cross-platform messaging to reinforce obstacles to iPhone families giving their kids Android phones. Apple could have made a better cross-platform messaging experience itself by creating iMessage for Android, but concluded that doing so will hurt us more than help us. They're really mad about these green text messages. And the last big allegation is smartwatches. Apple protects its smartphone monopoly by impeding the development of cross-platform smartwatches. Essentially, the government is saying that Apple has made it difficult for the iPhone to work with smartwatches other than its own Apple Watch. So once an iPhone user owns an Apple Watch, they become pretty much dependent on the iPhone because it's a lot more costly to ditch that phone. Actually, one more big one here. Digital wallets. Apple restricts cross-platform digital wallets on the iPhone, reinforcing barriers to consumers switching to rival smartphones. They're saying that Apple has used its control over app creation, including its technical and contractual control over API access, to effectively block third-party developers from creating digital wallets on the iPhone with tap-to-pay functionality. Apple maintains complete control over how users make tap-to-pay payments with their iPhone. Apple's defense here is definitely going to be privacy and security. While Apple actively encourages banks, merchants, and other parties to participate in Apple Wallet, Apple simultaneously exerts its smartphone monopoly to block these same partners from developing better payment products and services for iPhone users. I mean, how are they going to prove this? Apple has charged issuing banks 15 basis points for each credit card transaction mediated by Apple Pay. Payment apps from Samsung and Google are free to issuing banks. So it seems like Google and Samsung are trying to undercut Apple in this instance. It goes on to say Apple fees are a significant expense for issuing banks and cut into funding for features and benefits that banks might otherwise offer smartphone users. Yes, the banks, they're really the ones getting hurt here. Everyone should be so sad for the banks. This part here just confuses me. In my view, this lawsuit is just fraught with contradictory statements. Like this one here, Apple's conduct has made its own products worse, sacrificing the short-term profits Apple could earn from improving the iPhone in order to preserve the long-term value of maintaining its monopoly. I really don't understand how making something worse would actually help you be more profitable in the long run. I also get vibes of concern trolling here, as if the DOJ is saying, Apple is doing these things, making its own products worse, so we need to sue Apple to protect them from themselves. Ultimately, the government has a tough road ahead in terms of proof. However, one official has said the DOJ does not rule out seeking a breakup of Apple. Right, okay, we'll see about that. This all seems very pie in the sky to me. Not only that, but this case will take years before we see any real potential outcome. And Apple is not just going to sit down and take this lightly. And an article in the Wall Street Journal lays out a few of the hurdles that the DOJ must clear if they have any chance of winning this thing. So the Wall Street Journal asked Professor Daniel Francis of NYU School of Law about some of these issues, saying courts have, for the past 20 years, looked skeptically at claims that monopolists must deal with rivals for the sake of fair competition. He said, courts have historically not wanted to supervise or micromanage complex business relationships. The lawsuit seeks to change the trajectory of modern monopolization law and reconsider the idea that a refusal to deal is rarely, if ever, illegal Francis said. Apple said the Justice Department has changed its legal theories against the company at least 6 times over the past 4 years. Apple officials also said the government recast arguments made in the Epic case after the approach wasn't successful in federal court. And it really seems like a little bit more judicial overreach. The Biden administration's success in diminishing the power of big tech will be difficult to gauge until cases are decided, but enforcers don't have a perfect record in their interventions. A federal court last year declined the Federal Trade Commission's request to block Meta's acquisition of a virtual reality startup. The FTC also lost a court challenge of Microsoft's $75 billion acquisition of video game publisher Activision Blizzard, which closed this past October. The FTC is still challenging Meta's acquisition of WhatsApp and Instagram in a separate lawsuit. The government has not showing a good track record here. So my initial read on this is yet another market overreaction to a DOJ action. And with the Apple stock falling over 4% today, it creeps back into what I consider buy territory. Like I said, this is going to take years to resolve, and Apple will certainly grow in that time. So let's take a quick look at Apple's valuation. So looking at my investment summary for Apple, I'm getting a discounted cash flow of $210.94. And to give you some context, my 10-year compound annual growth assumptions are this. Revenue is at 6.4% compound annual growth, and I have free cash flow growing at 7.7% annual growth. Combining that with an exit multiple of $239.31, we get a valuation average of $220.87. Given that they closed after today's news at $171.37, right now we're looking at a nearly 30% potential upside. Now I'm using a 20% margin of safety now. Usually I use a 10% margin of safety for Apple. However, after today's news, I'm going to give myself a little bit more of a buffer. So right now, that $171, it's just under the acceptable buy price, which is at $176.69. And including the discount dividend model as part of this valuation, it would knock it down quite a bit. So in my view, including the dividend model depends on whether or not you view this stock as a dividend stock or a pure growth play. They do have a dividend yield of 0.5%, which is pretty insignificant. However, if we did include the dividend, you can see that acceptable buy price does come down quite a bit to about $140.15. It's certainly possible that the share price for Apple will drop over the next few days, but if you're looking for real safety, the price would need to come down quite a bit to feel safe buying Apple. I will say that United Health Group, they spent almost 2 weeks falling after the DOJ announced their investigation into them. Either way, I don't see this affecting Apple in the near or medium term. In fact, I believe that the DOJ has a particularly weak case here. However, I'm not a lawyer, so take that with a grain of salt, but I really don't see how there is less choice or how the consumer has been harmed in any way by Apple. People get iPhones precisely for their premium quality and closed ecosystem. To me, that's a selling point of Apple. People want that exclusivity that the iPhone provides. So while the news sells this fear about Apple, perhaps it's a good time to be a little greedy.